Hi there, welcome to kneppyinvests. In recent times, I have slightly or subtly changed my investing philosophy or strategy because, in my opinion, and this doesn't mean I'm going to be right, the likely returns for passive investing won't be fairly or won't be significantly high over the next 5 to 10 years. I do think there's a lot of headwinds in regards to passive investing during that time period. In particular, more than likely we'll see interest rates rise. That doesn't mean they will, but that's a greater chance they will than they will fall. And if we do see interest rates rise, that will have a negative effect on the markets. Also, the current valuations of a lot of companies are at historic highs, and the overall valuation of the market is abnormally high. So more than likely, we're going to see a bit of mean reversion over the next 5, even 10 years, which means passive investing strategies will underperform to what we have experienced over the last 10 years. So what I'm doing now with my strategy is using more of a short-term and medium-term strategy, looking for companies where I do think the share price could go on a run over that shorter or medium-term period. And in fact, in this week alone, I've taken 2 positions in companies, and both companies I'll be featuring in this video. The thing I'm doing is I'm looking at announcements every day, and I'm looking at how the market is reacting to those announcements. And if I do see significantly positive reaction from the market, that's when I get excited about a company. So 2 of the companies I've taken positions in this week, one company's share price rose about 90% on the day, and the other company's share price rose 120% on the day. And then I took positions, and already I'm in the green for both of these companies. The other thing I'll do in this video is I'm going to go back in time and look at the breakout in Sandfire's share price in 2009. What caused that breakout? Because I'm very interested into seeing what causes a breakout for company share price. And in Sandfire's case, if share price broke out about 40 cents, and then we saw the share price rise to $4 over a very short time period. So what caused that, and can we learn anything from it? The 5 companies I'll be featuring in this video include Sandfire, but we won't be looking at what's happening with Sandfire right now. It's all about 2009 and whether we can learn anything from what happened to that company in that year. The 4 companies, I'll be mostly featuring this company in terms of potential breakouts right now are EMMERSON Resources, VULCAN Energy, Neuren Pharmaceuticals, which I've already featured in a video recently, and EGL, which is the Environmental Group Limited. But first company we're going to look at is Sandfire in 2009. If we go back to the start of 2009, the share price of Sandfire was hovering around, I think maybe as low as about 5 cents, or maybe even lower than that. Wasn't until just before May 18 of 2009 where we did see a little bit of interest come into Sandfire. In fact, just before a significant announcement the company released on May 18, we did see the share price of Sandfire go on a bit of a run. I'm not sure if they were issued any sort of price queries, because it did look quite weird to see the share price of Sandfire go from about 7 or 8 cents all the way to 25 cents in a 2-week period on the back of no news flow. And then on the May 18, they released a significant bit of news that saw the share price increase 70% on the day. And there will be some investors out there who see the share price rise 70% in a day and instantly won't take a position in the company because of recency bias. And what they do is they look at the share price, say for Sandfire on that day, it got to 40 cents. And then they see or notice that a few weeks previous, the share price of the company was less than 10 cents. So why would you buy into a company's right now if the share price is 40 cents when you could have bought in the past at 10 cents? But there's new news to the market, and the market has reacted to that news, and that's why the share price rose 70% on May 18 and then a further 26% on May 19. And you can just see what the share price happened after those 2 dates. The next few 4 or 5 trading days, in fact, the share price actually fell a little bit. So the high we did see was 60 cents, and then the share price fell to 40 cents. on low volume. That's very important. The share price falling on low volume. That means there's not a lot of sellers willing to sell the shares during that point. And as soon as those sellers who are willing to sell it out are exhausted, we do see or potentially see the share price wanting to go on a run. And that's exactly what happened with Sandfire. In fact, the share price went from 40 cents to a high of $2.40 over about a 2 to 3 month period. So that's a nice six-fold in share price during that time period. Then we saw a little bit of, we'll say a little bit of a correction in the share price. In fact, it fell from $2.40 to $1.40, but again, that was on really low volume. There was not a lot of sellers. And as soon as those sellers were exhausted, the share price went on another run. In fact, the share price went from $1.40 to a high of $4 towards the end of October. So that means over a 5-month period, and if you were patient enough, you could have had a 10-bagger in this company, even if you bought on May 18, the day the share price rose 70%. And then the share price went sideways, and I think it went on another run a few years later. But what caused this significant re-rating in Sandfire's share price, where we saw a 10-bagger over a 5-month period? It was on the back of some drilling results in regards to gold and copper discovery at the DeGrussa prospect. Now, I'm not a big expert in reading drilling results, but I do look for particular things. One of the things I do look for, say for copper, is 100 meters at about 1 or 2% copper. If I do see that, that immediately rings some alarm bells, good alarm bells. But for Sandfire, it was 47 meters at 5.3% copper. Immediately, that does look good. And then 20.1 grams per ton with gold, and then 1% zinc from 93 meters, and then 22 meters at 3.6% copper, and then 3.8 grams per ton gold, etc., etc. So this is how or why the market reacted so positively to Sandfire, and why the share price rose or increased tenfold over a 5-month period. It's all about mining or drilling results. And if you do have a little bit of understanding what can drive the market, you are much more able to react to drilling results and the market reaction to drilling results. And that's what I'm learning right now, is to be able to understand drilling results at a novice level, I'll say, and then also understanding the market reaction to the drilling results. And we're talking about this for one company, which is EMMERSON Resources, that did have a really good, on the surface, a really good drilling results, and why the share price rose 120%. So just keep this in mind, these drilling results, as we look at EMMERSON Resources later in this video. And later in this video is right now. This is EMMERSON's announcement released on the 8th of December that led to 120% rise in the share price. The title of the announcement, I don't know if they should have included the word stunning. I think that should be left to the reader of the announcement to think of this as being a stunning result. They don't think they should be putting that word into our minds. That's just me. I think it should be just left up to us, the reader, to decide if these results are stunning or not. But stunning, 117 meters at 3.38% copper drill hit at the Hermitage project in Tennant Creek, ends in mineralization. Now, on the surface, and the fact that I wouldn't call myself expert in reading results, these do look pretty good. 117 meters at 3.38%. And the first thing I always look at is 100 meters at about 1 or 2%, and this exceeds that. They also bounded the drill at 192 meters, right at the point where they were getting the best results. Now, I have seen a little bit of commentary on these results from some experts who say, well, we're going to have to wait a little bit longer to see if or how large this potential deposit is. So this is a good first sign for EMMERSON, and why the market has reacted really well, but we're still going to have to wait a little bit. But if we kept getting really good results from these drills, there is a potential that the Emerson share price could go on a run just like Sandfire. Doesn't mean it will, just there is that potential it might. And in fact, the share price of Emerson increased to 130% on the back of these drill results, up to 17 cents. You can see, leading up to the drill results, there was no real run up in the share price, unlike what we saw with Sandfire. So no loose lips, no expectations in regards to these drills. And then the share price reached a high of about 22 cents on the day they released this announcement. Now, I don't like to see a lot of selling, and we know there's a lot of selling because of that long tail in the candlestick, which means the high in the day, I think, was reached relatively early, and then a lot of shareholders saw the share price get to that 22 cents and decided to sell. And then on the next day, there was a little bit of selling, particularly towards the end of the day, and the share price finished at 15 cents. I have taken a position in this company at 16 cents, and I am willing to see how this company will go on a run over the next few days. But typically, what I usually do when I see these sort of results is I don't take a position on the day of the announcement. I will wait a few days or potentially the next day. And I just thought 16 cents was a good position to take, a low risk position, because I don't think the share price will go below 15 cents. And if it does go below 15 cents, I will go out of my position at this point in time. But I think there is a good chance we might see a bit of a run in Emerson's share price. The other thing to take into account is if we go back through time, and I went back through the last 10 years of Emerson, the share price of Emerson has gone in runs, and in fact it has gone in runs quite frequently. If we go back to 2016, the 5th of July, we saw the share price increase 38%, and it definitely broke out on the back of some high-grade gold intersects at Edna Beryl, 6 meters at 13 gram per tons. Now, 6 meters, 3 meters, and 9 meters don't seem a lot. And typically, if I see 6 meters, 3 meters, and 9 meters, no matter the grade, I completely ignore those results. So even though this was a catalyst for a bit of a re-rating in Emerson's share price, eventually it did fail about 5 or 6 months later, because we did see share price actually decrease from the end of this chart period. So even though the share price did increase from 6.5 cents to a high of 19.5 cents, eventually this run on Emerson at this point in time did fail. And we actually can see that in the volume. The highest volume was on the day they released this announcement, and then the volume dried off, which means the market was becoming less and less interested in Emerson. And that's when you sell out a position, when you see volume drying out, which means the market again is becoming less interested. You want the market to remain interested in the company. That's what drives the share price higher and higher and higher. On to VULCAN Energy. This company has been sort of a favourite among retail investors. We have seen a share price run up a lot in the past 18 months. But on the 8th of December, they announced a binding lithium offtake agreement with Volkswagen Group, which is really interesting because in my opinion, again, this is just my opinion, the company or the biggest threat to Tesla in the future is Volkswagen Group. It does seem like that company has, I'll say, they know what they're doing, and they are the biggest threat to Tesla. The next company that has a potential, is going through a potential breakout as I speak, is VULCAN Energy. They released an announcement on the 8th of December that did get the market excited. This is in regards to a binding lithium offtake agreement with Volkswagen Group. Now, in my opinion, and the reason why this announcement is exciting is because the biggest threat to Tesla in the medium to long term is Volkswagen Group. If I was going to buy an EV company right now, more than likely it would be Volkswagen Group over Tesla. Now, there is a reason why in Europe right now, Volkswagen Group is winning the race when it comes to electric vehicles. And there is potential that in the long term, it's going to be Volkswagen Group that is going to be the big EV manufacturer. Of course, you could have a completely different opinion, but when I look at some of the vehicles they are producing, like Audi, Volkswagen itself, and just the quality of some of those vehicles, particularly Audi, does look like there is that potential that Volkswagen Group will become a significant EV player over the next 5 to 10 years. And the valuation for Volkswagen right now is quite attractive compared to Tesla. But putting that all away, that's the main reason why I'm excited about this announcement, is the potential breakout in Vulcan's share price. So let's have a look at the chart right now. The share price for Vulcan did increase by 14% on the back of this announcement. Now, the thing I am not worried, but the little thing that would make me a little bit more hesitant about taking a position in Vulcan is simply what's been happening with the share price over the past, we'll say 3 to 4 months. The share price reached a high of $16 in September and has been falling ever since then. In fact, it fell from that $16 to $9 recently, in fact, a few days before this announcement. And you can see the share price did pop up on the back of this announcement. But there's a lot of resistance moving forward because a lot of people have bought Vulcan shares over the past 3 months or so at higher share prices. And their thoughts are that Vulcan Energy is a dog stock because a lot of investors, particularly new investors, if they see the share price fall from when they bought, a company automatically becomes a dog stock and they have to sell out. And that is resistance. So typically, I like to see a breakout of a company's share price when it's at not an all-time high, but at least about a 5 to 6 month high. That means there's less resistance for the share price to go higher. Now, I've seen this sort of scenario play out time and time again. When a company releases a potential breakout announcement, share price pops up 14%, and then we see a lot of selling and the share price falls, and that's potentially going to happen with Vulcan. So what I'm doing is putting Vulcan Energy onto my watch list. And if I start to see the share price go higher from here on in, that could mean this potential breakout is much more powerful, and we could see Vulcan's Energy share price move into an uptrend. The other thing to keep in mind is this offtake agreement only becomes applicable from 2026. That's 5 years from now. And in the past, I've seen a lot of offtake agreements seem like they're really good, but nothing comes from them because a lot can happen in 5 years. The next company is the Environmental Group Limited, EGL. I've been following this company for quite a few months now, because the share price did break out a fair while ago, but I didn't want to take any position in the company because, well, the first thing is I don't know what they do apart from environmental stuff, and there was not a lot of volume to justify why the share price was breaking out. But the market has reacted quite positively to this company over the past 6 months or so. Maybe it's because they have the word environmental in their name. It could be something as simple as that. But the market again reacted quite positively to this particular announcement, titled Commercial Water Trail Demonstrates Successful Separation and Removal of Regulated PFAS from Various Waste Streams. So straight away, that does sound pretty good. They also mentioned they did do a capital raising at 17.5 cents per share, $4.7 million, and there was quite a bit of support for that. Sometimes you'll see capital raising at a share price lower than what it is, and the market becomes bearish about the share price, and you'll see the share price actually fall to where the placement is put at 17.5 cents. But the share price of EGL did completely the opposite, maybe because of the announcement in regards to the commercial water trials, and that's what stimulated the market and a re-rating in the share price. The shares of EGL broke out actually way back in February of this year. You can see the share price was moving sideways before that breakout in the share price at around about 3.5 cents. And then all of a sudden, we did see the share price rise, but not on significant volume. And the share price has just kept on rising from then. It's actually increased from 3.5 cents to a current share price of 23 cents. But we haven't seen a real big increase in volume. We have seen spikes in volume, which could be just fund managers taking a small position. But on the back of this particular announcement, the share price actually did increase 31%, which is a good reaction from the market. But again, we didn't see really high volume coming into the trading of this company. And then on the next day, the share price remained steady at 23 cents. That's actually good. When you see the share price remain at a level, you don't see any sell-off. That means there's a little bit more power to the announcement. So potentially, if the share price keeps on remaining about 23 cents, that could be telling us that there's a bit of consolidation period. Those who could have sold out have sold out, and that would lead to a higher chance the share price might go up from 23 cents. So at this point in time, I'm just having passing interest in EGL at this point in time. I'm not really willing to take a position in this company unless I discover I see some good financial news from the company and I see increasing volume. That's the main thing I really want to see, is some good financial news and increasing volume. Last company I want to talk about is a company I've already featured in one of my videos in the last few days, and that is Neuren Pharmaceuticals. I mentioned Neuren in the video titled 3 Hot Stocks, 2 Cold Stocks, because the share price increased 93% on the back of this particular announcement, which is a significant announcement for this company. And that announcement was titled Positive Top-Line Results from Pivotal Phase 3 Trial in Rett Syndrome. Now, funnily enough, I was a shareholder of this company back in 2013 simply because of the potential of some of their drugs regarding Rett syndrome. And the share price really has done nothing since then. But this could be, and I'm going to say could be, the catalyst for a significant re-rating in Neuren Pharmaceuticals share price. And in fact, 2 of the last 3 days, Neuren Pharmaceuticals has been the best performing company on the ASX. Not only the day they released this announcement, but also 2 days later, where we saw the share price increase 23%. And the reason the market is excited about this company is simply because of this announcement. Leading up to this announcement, not a lot of interest in Neuren Pharmaceuticals, but as soon as they released this announcement on, what was it, December the 7th, the share price increased 93%. Now, the share price didn't quite finish or close at the high of the day, and if the share price does finish at the high of the day, that is even a much more bullish signal. Then the next day, on December the 8th, the market was quite mooted in regards to Neuren. The share price was remaining between about $3.10 and $3.20. I decided to take a position at $3.20 because of the reaction of the market on that particular day. We didn't see any significant selling. And then the next day, the share price rose 24 or something percent from $3.20 to a high of $4. And that is telling me there is a lot of power, a lot of strength behind this announcement. And the other thing that trading on that day is it moved the share price past on strength, past a significant resistance level. So let's have a look at the weekly chart and I'll show you that significant resistance level. This is the weekly chart for Neuren Pharmaceuticals going back to 2013, the year I took a position in this company. And from 2013 to now, we have seen a share price of Neuren Pharmaceuticals oscillating between about $3.60 and about 90 to 80 cents. So a lot of volatility in the share price, but really has done nothing up until now. And in fact, the trading or the volume of trading in this particular week is significantly higher than what we've seen in the past. And again, that is showing us the strength behind this announcement. And the high in the share price for Neuren over the past 8 years has been $3.60. It has reached that level twice in the past, and both times it failed and retracted back. So as soon as I saw the share price go through $3.60 and remain above $3.60, that was showing me that that resistance level has now become support. And if I see it breaking that support at $3.60, that would be the time I sell. But I'm hoping this is the start of a significant run in Neuren Pharmaceuticals share price, simply because of this significant announcement by the company. That's all I have for this video on breakouts that are happening right now on Positive News. Also, I look at back in the past at Sandfire 2009, seeing what caused their breakout in the share price back then. If you have any questions about my or this sort of investing philosophy or strategy, I'd love to hear your thoughts, your questions, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.